Good morning. You're watching the market right here on ET Now. After a day's break, that's exactly what you want to see. All green on the screen. And fortunately, we've not been prey to any bad news. I think lack of news in this kind of a market environment, Nikunj, is turning out to be good news.
1 day break, I think a 2 day, 3 day break for you, no?
For me, it wasn't a break as you saw. I was at work. But yeah, anyway.
No, Aisha, you got to ask yourself a simple question. Where problem kahan hai? The problem is in the world, which is what's happening to the US financial sector, what is happening to European banks. But despite what is happening to global financial sector, global markets are up and running. Nasdaq has recouped whatever it has lost. Most of the developed market equity benchmarks are stable. So while the Indian underperformance, I think, is evident and it is quite stark, one is getting a lot of support from the fact that globally what appeared like a repeat of 2008, which everybody thought that we are in for a messy global financial meltdown kind of an scenario, that concern clearly has evaporated. So as you walk into trade this morning, global cues are stable. Foreign institutional investors have stopped selling. The compulsive pressure of what we saw in the month of March in terms of year-end adjustment, F&O expiry, that is behind us. So I would say that after 4 months of a straight line decline, it is time now to play for a tactical bounce. I will not be surprised that April perhaps could be a good month, and it could be a month where the bulls are actually rewarded.
In fact, even for US equity markets, we're actually bad, or rather above, in fact, not just back the pre-banking crisis with SVB. If you just were to look at the headline indexes, be it the Nasdaq or the Dow and the S&P, the US weekly jobless claims, they've risen by about 7,000 of a count. The dollar index has fallen about 0.5%, and gold and crude both have seen an uptick of about 1%. So that's really what's transpired when we were on a day's break. Talk about our markets and commodities for that matter. Commodities are the ones which are actually seeing a bit of a spiral up. So across the board, be it WTI oil, which has jumped up about 2%, Brent, which is up 1.25%, natural gas, gold, silver, copper, they've all seen an uptick. In fact, even agri-commodities are the ones which are on a bit of a spiral up. And talking about our markets, it seems like it's going to be a positive start, and we're back at that higher end of the trading range, around that 17,200 level.
You got to be more bullish than bearish for the month of April. That's how I look at the setup. You had 4 months of straight line fall. The fall was largely because of global factors. Those global factors are getting addressed, they're getting arrested. That's one. Second, for institutional investors, month to date, they've turned net buyers. So the liquidity problem, which was sucking out momentum from the market, that also seems to be getting addressed. Third, you are in for an earnings season where this time around expectations are very diluted. There is a crack in the commodity complex, especially the crude complex, and that is something which will only factor in more margin expansion for commodity consumers. So I would say that for the month of April, looking at the positioning, looking at the market setup, global cues, market expectations, and the F&O activity, I will not be surprised that April could be a good month. Good does not mean that it's going to be a 5-6% uptick. Good means that the trend of decline hopefully should get arrested in the month of April. And the technical range, like Aisha also said, that we are the upper end of the range. Not really the upper end of the range, but the lower end of the range has been beautifully defended in this global meltdown.
Well, today we also closed the financial year. How quickly the financial year at least has closed. And I mean, sadly, we have been one of the worst performing index in the fourth quarter, in the last 3 months, that is. And we're likely to close negative for a fourth consecutive month as well. The FII-DII trend, that continues to abate us. So FIIs continue to sell India. And even if you were to look at the performance in FY23, for instance, the Nasdaq lost about 15.5%. The Dow has been down about 5%, and both the S&P as well as the Nifty have managed to lose about 10%. I don't know if that makes a stronger case for a better rebound, because the world markets have recovered. We're clearly lagging behind.
So Aisha, let's look at that FY23 market performance. Yes, we've fallen less than what global markets are, but it's no longer that stark as what it, let's say, looked in the month of Jan. In the month of Jan, Indian markets had not fallen at all and global markets had cracked in 2022. So now that connection between S&P and, there you go Asha, see S&P 500 in last 1 year is down 10%, Nifty is down 10%, and Dow in fact is down 5%. So all I'm trying to say here is that the outperformance what Indian markets registered in FY22, now if you expand the last 3 months of timeline, add another quarter in it, that outperformance I think is getting completely diluted. That is something which I think is worth mentioning again and again, that A, price-wise correction, B, time-wise correction has kicked in. And no wonder from a JP Morgan to a Morgan Stanley this morning, from a BofA ML to Citi, all of them now have come out with a brave foot forward, which was not there at the beginning of the year, that it's time now to buy India. Now it's judgment call whether you buy a 5% decline, you buy a 10% decline, or you start buying now. But it's time not to sell. This is not the time when you want to go short. This is a time whether you want to start accumulating depending on your comfort in terms of a price point, but the risk reward ratio, I'm going to stick my neck out in here and say, is in favor of going long.
Okay. And of course, next week is going to be another crucial one. You've got the RBI policy, Nikunj. Q4 banking updates will start coming in. Brokerage reports on IT will start trickling in ahead of the earnings season. And of course, the March auto sales numbers as well.
Lots of holidays next week.
Okay, losing track of that.
Good Friday, there's a holiday on Tuesday, I think. So it's one of those, April, you get this 1 week in April where you have two holidays, one patch. So likely that's a patch next week. But yeah, as we, next week, it's going to be full till back to news. Credit policy, auto numbers may not be that crucial, but ID numbers in a sense really would be crucial, considering that all we are getting from the IT sector is bad news after bad news. Campus hiring is slowing down. Bonuses are getting reconsidered. The layoff word again is back. The sugar rush is over. And forget, moonlighting. Right now, the whole concept of moonlighting, which everybody was troubled about last year, is now just behind us. So next week, in a sense, would be starting next week, we move into the news phase of the market. The month of March was all about technical and what was all about global cues. But next week, I guess the local cues, in a sense, will overarch the local news flow, in a sense, will overarch the global news flow.
Yeah, absolutely. Okay, this morning at least the handover from the globe seems okay, and the SGX Nifty is indicating a flat start, and that's so much better than what we've seen in the last month gone by or so. But here's Lawrence Belanco from CLSA. He's expecting further volatility in the Nifty range. He says, and that's going to lead to more underperformance for the next 2 quarters.
Well, our base case is that we're expecting to see further volatility in the trading range that the Nifty's set up, basically from the peak that you made in late 2021. And that range, unfortunately, is fairly wide. We're talking about a 15 to 70% wide trading range, which has provided support around that 15,400 area for the Nifty and resistance up at the 18,600. The positive short-term setup is that we did find support at the 16,700 area on late last week, and we continue to hold that in early trade on. So best case scenario is that we're holding the upper boundary of that trading range. The fact that the Nifty remains trendless would suggest that at least for the next 2 quarters, we're likely to see further relative underperformance if you look at it versus an EM basket at least. Also, we can continue to hold the 16,800 to 18,600. That would be the best case scenario. The weakest scenario would be a break below the 16,800, and that would open the door for a move to the bottom of the range, which comes through at the 15,400 area. The trends are still very positive for the broader market, and we still got upside targets of 20,700 to 20,800. But we have mentioned before, that it's not uncommon for the Nifty to spend a number of months, if not years, trading in a range. I mean, you can go back to the 2010 to 14 scenario that you consolidated the gains of the 2009 lows before you broke out in 2014. And then you saw a similar 12-month period between 2015 and 16 where the market digested the gains following the breakout from 2014. And currently we're pushing on to 16 months of a ranging period, and that could extend for another 6 months at the very least, but it doesn't alter the longer term structure, which remains bullish.
Okay, back home, markets regulator SEBI in its board meeting yesterday approved a broad framework of applications supported by blocked amount of ASBA-like facility to investors for secondary market trading. In fact, the market regulator will also be setting up an institutional mechanism for prevention of and detection of fraud or market abuse by stockbrokers. In fact, among some of the other reforms taken up was also the decision to end the permanent board seat among the board of directors for listed companies. In fact, let's hear out what the SEBI chair had to say.
We are absolutely delighted to share. The Honorable Finance Minister had made an announcement in one of the budget speeches about a corporate debt market development fund, which was to function as a backstop facility for mutual funds in the event of a market dislocation in the bond market. And we're very happy to share with you that that whole initiative has made a very, very significant progress, and therefore today the board approved the creation of a new chapter in our AIF regulations to facilitate the creation of this fund. So basically what this fund will do is it will sit there on standby and just be on standby in normal times. But whenever there is a significant market dislocation which warrants sovereign intervention, so it has to be really something significant, not minor volatility, but a significant event happens, then just like you have developed markets who instantly trigger asset purchase programs, we will have the ability to, with the press of a button, we would be able to activate this fund, and it would go in there and become the buyer of last resort from the mutual funds.
So are we in for a Good Friday? Looks like we are in for some gains. Kunal joins us. Naresh also joins us. Kunal, are we in for a Good Friday?
Well, looks like, Nikunj, a lot of happening positive data points across the globe. In fact, the biggest data point which transpired in technicals was Nasdaq coming back above the 200-day moving average and hitting that bull market zone. So bull market is basically just the contra of bear market, where the indices rise by 20% from the previous swing low. So that's one of the major comeback from the global arena. Most of the other Asian markets in the last couple of days have been showing a lot of strength for themselves. Now, interestingly, the data which on Wednesday we had the monthly expiry, and one of the biggest observations which I saw was many of the stocks where there was huge amount of shorting, the likes of Maruti, etc., many large cap names which had actually seen a good amount of downtrend. The rollovers, the short rollovers did not get carried forward for the next series, which means that traders who were shorting the stocks for the last couple of series and the stock was going into a downward trend, they've managed to withdraw their positions as well as close their positions and not rolled over to the April series. So that could be a heartening fact for the overall market breadth, where we may expect many of the underperformers in the last couple of months to also get into a recovery. So net-net seems to be that the market seems to have established a strong base at 16,800 mark, and the bias would now start to become bullish.
Naresh, hi, morning. Are you also feeling as optimistic this Friday?
Absolutely. So, say another data point, DAX has actually hit a new 52-week high and an all-time high. Now, this is the place where Deutsche Bank is listed. So that clearly tells you the market momentum has shifted very much into the positive across the world. And now we need to cross that 17,200 mark today and start getting towards that positive mark. So I would expect a move towards 17,200 to 300 over the next couple of sessions. And say Nasdaq has done well. US indices have crossed the recent swing highs and made a good close. So overall positivity across the world. Expect a gap up. If it does not gap up in a big way, it's a buy in the morning itself.
So Naresh, are we in for one of those outlier kind of an April? I mean, do you think it makes perfect sense to, let's say, plan your trading portfolio for a big 3, 4, 5% kind of a nifty month?
I would expect it to be that, and there should be the strategy should be to think afresh for the new financial year as well. Last 12 to 18 months were a washout. It was a terrible time for trending, say traders who were trend followers, because there was hardly any consistent trend. We would see floppy moves wherein the breakouts would not work. I think that is a process which is going to change now, and we would see trending moves going forward. So time to look out for fresh trends developing from the next one. So positive bias plus look at the stocks as well, and positive on the Nifty for 17,600 plus.
Okay.
Right. Okay. Let's talk stocks and let's see what our chartists are betting on this morning. Kunal, what's on your list?
So a couple of buy calls. The first one is about Page Industries. Looks attractive as a setup because the stock is nearing a breakout of the 50-day moving average. Again, a stock which has been correcting quite sharply over the last, I think, 6-8 months. So I would sense that a bottom formation could probably be done for Page Industries as well. Targets of 40,000, stop loss at 37,000. And Chola Finance is the other stock which is actually riding on high momentum. So that's also a buy. Expecting near-term targets of 755, stop loss 721.
Right. Naresh, what about your stock strategies?
So that would be a buy on SBI first, a stop loss at 505 and a target price of 550 plus. The stock has bottomed out around that 500 mark over the last 1 year. The recent low also when the Adani announcement came in was around 500. And we are seeing a recovery from those levels. I would expect an initial move to 550, 560. Once that crosses, it gets into a fresh trend towards an all-time high. So for now, a risk-reward trade, stop loss at 505 and a target price of 550. Second is a buy on Axis Bank, which has seen a good 10-15% correction from the top. Base made at 815 to 820 and is now making a comeback, expecting a quick target of 900, stop loss at 830.
Right. Okay, let's also get in some more stock ideas. Here's Saurabh Mukherjee telling us what he's betting on and what he's bullish on.
So in Divis's case, if you look at the business today compared to where they were pre-COVID, the business is around 30% larger. Revenues are 30% larger. You see Divis incredibly well positioned. So through November, December, we doubled our position in Divis. Coming to Dr. Lal PathLabs, somewhat similar, right? If you look at operating margins, they're higher today than they were before COVID. And this talk about comparative pressure, I think, is a lot of nonsense. And we see Dr. Lal nicely positioned. So July, August, we doubled our stake in Dr. Lal. So I think we haven't added Tata Elxsi in our mid-cap portfolio. That was our last big addition. You flashed on your screen. We got out of Relaxo and added Tata Elxsi around 3 months ago. The other addition we've made in our financial services portfolio is in the midst of this mayhem around capital gains tax on debt or income tax on debt mutual funds. We've added Prudent Corporate. Prudent is a wealth manager, which is a wealth management platform for the IFA community. We've added that to our Kings of Capital portfolio. And as I've said in the past, we keep looking at Nykaa and saying, are they in that space? Has Nykaa built a platform? Has Falguni Nair and team, have they built a platform which is distinctive, which is unique? There are elements to what Nykaa does which we think are very clever, very unique, but I think they could do more on the tech platform. Yet to find too many digital businesses in India which have distinctive capabilities. InfoEdge remains in our mid-cap portfolios as one such business. I think the Naukri platform is utterly unique, and the VC business that Sanjeev Chandani and team have built using the cash flows from the Naukri platform is a very clever way to monetize the free cash flows coming out of Naukri. So if somebody else out there builds a Naukri, builds something akin to a Naukri, a distinctive, unique business, we would love to invest. Because our only conventional FMCG play is Nestle, because it's not possible to sell baby milk powder, D2C. It's a very difficult industry to enter. There's licensing, there's restricted selling, and therefore Nestle remains our core FMCG play. The rest of the FMCG plays, I think the moats are eroding as D2C comes of age in India.
I'm just going to go back to the dollar index point here, guys. And that is very, very crucial for us to point out. Why is the dollar index at 102? If the dollar index is at 102, mathematically, emerging markets should do well. Mathematically, commodities should do well. Decline in dollar, strengthen commodities. Decline in dollar, good news for emerging markets. That trade so far has not played out. Will that trade be at play in the second half of this year is the most crucial thing which we really need to understand. Will the dollar weak strength emerging market trade be at play? Kunal, you understand trends, you look at history. History, when dollar goes down, commodities go up. When dollar goes down, emerging markets, they go up. Right now, it's the ulta. Dollar index is down, commodities are down, and emerging markets are down. Why is that?
Well, I think one of the reasons why commodities and metal stocks are actually down is because the sentiment is down. So because we are actually into a phase where even if there is any kind of a positive news flow, it doesn't result into strong price action. Now, we can have a like-to-like comparison. For example, if the Nasdaq is up, then the IT index also should replicate a similar kind of a performance, and the large cap IT stocks, at least in our markets, should have a very similar kind of a price performance. But then I think this is just a phase of the markets where things are not in strong correlation. It's because of the sentiment not being as buoyant across the Indian market specifically. So I would probably believe that it's just a phase of the markets. Sooner or later, the correlation would kick back again into the indices once the sentiment becomes into the extreme positive. My sense is that the dollar index should fall back, below the 100 mark as well, possibly in the next 2 to 3 months, and that could boost many of the emerging market currencies as well as have a positive effect on our markets as well.
Okay, let's all talk about what's making the headlines this Friday morning. And Motilal Oswal has initiated a coverage on Vedant Fashions with a buy rating, while Jefferies has also initiated coverage on SBI Cards. Investec has initiated coverage on Interglobe Aviation with a buy. Ashesha is here to tell us why these brokerages are betting on these stocks. Ashesha?
Well, yes, we have three initiating coverage notes this morning. First up on Vedant Fashions, where Motilal Oswal has initiated coverage with a buy, and they've given a target price of 1400 rupees per share. They say minimal capex requirements of the company could translate into healthy cash conversion cycle and ROIC at 58%. They expect the company to report a revenue growth of 21% on a CAGR basis over the period FY23 to 25, and they expect the PAT to grow at 22% over the corresponding period. Apart from this, Jefferies has also initiated buy on SBI Cards with a target price of 900 rupees per share. They say penetration into SBI base, co-branded card tie-ups will help the company enjoy market share gains. They expect profit to grow at about 23% on a CAGR basis over the period FY23 to 26. Apart from this, a note has come in on Interglobe Aviation as well from Investec. They've initiated coverage with a buy rating, and they've given a target price of 2,500 rupees per share. They say improved competitive landscape will help the company enjoy higher yields, and cost leadership will drive industry-leading profitability, and company will continue to enjoy market share gains. On account of these three initiating coverage reports that have come in, all of these three counters will be in focus today.
All right, now, well, unfortunately, sad but true, there is a big COVID spike again. And COVID spike, at least this time in New Delhi, is indicating that the numbers are as high as what we've seen 6 months ago. Remember, 6 months ago, we were in a declining trajectory. Right now, we are in an upswing. So what are the COVID symptoms this time? Are they strikingly different from what they were last time? Is this just a flu, or we need to again mask up, pad up, and take care of the COVID precautions? Let's take this point forward with Dr. Prashant Judge, consultant, and he is part of the pulmonology department with Nanavati Max Super Specialty. Dr. Prashant, good morning. Thank you for joining us. I've never had a chance to interact with you in person, but so nice to have you on the show. The spike in the COVID numbers, sir, is that dangerous or this is manageable?
The spike that we are seeing in the COVID numbers is, it seems to be linked to the variant of the Omicron. The symptoms are mild right now. Most of the individuals who are having the symptoms are having the symptoms dominantly for a couple of days. So the symptoms at the moment seem to be, what we observe are mild. Of course, we need to continue our vigil and observation strongly for individuals, again, the high-risk individuals who are elderly, got comorbidities, have got underlying malignancy treatments going on, or are on immunosuppression therapy, etc.
How are the symptoms exactly different from the last, let's say, Omicron wave?
The symptoms that we have seen in the currently in the last couple of weeks are again the same: fever, sore throat, body ache. I had one patient again who had also the loss of taste was there. So the symptoms are the same as one had for COVID. What we are also seeing now, or have seen over the last few weeks, is a surge in the influenza wave. So we have been seeing a lot of patients with influenza and a few with H1N1 also. So there seems to be an overlap. Often there is a thought that, yes, this could be a flu. So it is coming like a flu-like illness. It is almost similar, I would say, to the flu-like illness. So unless you actually test, you would not know whether this is a regular influenza or this is the COVID-19 at the moment. So the symptoms, Nikunj, are again the fever, sore throat, cough, running nose, body ache. These seems to be the common symptoms. some of the patients do have a prolonged cough, which doesn't settle down as one would expect after a few days. So people are having a cough, which is prolonged for a couple of weeks. And individuals who have underlying lung problems, such as a bronchitis or an asthma or any other lung problem, seem to have more prolonged cough than other people.
Prashant, is it true that the cases are much higher within children, and especially the, the segment which was not vaccinated?
So, I mean, we are seeing a surge in children also. Again, I would say it is a mix of influenza. So, influenza at the moment seems to be coming more positive, seems to be coming more often positive than the H1N1. So, at the moment, I would say it is dominantly influenza and some cases of H1N1. I'm sorry, some cases of COVID, sorry.
Okay. Sure. Is it as contagious as the previous stages of COVID were, or is it a much milder strain, you think, Dr. Prashant?
This seems to be a milder strain. The symptoms are lasting for a very short time. Most of the individuals are responding well to just symptomatic therapy with paracetamol, for example. So it seems the symptoms overall seem to be milder.
Can this be managed at home, sir? Are there any cases where oxygen is dropping? Does that scary protocol start again?
So, most of the patients, I would say, are being managed at home. Symptoms are for a shorter duration of time. Individuals seem to be recovering quite, within a few days. However, a few individuals, again, as I would like to reiterate, are those who have comorbidities, who are undergoing cancer therapies, immunosuppression therapies. So we would have to identify these individuals or monitor them closely, and some of them would need hospitalization and maybe intravenous, antiviral therapies as per the protocol. So at the moment, the protocol in my practice and what my colleagues and me are practicing are just symptomatic therapy at home and keeping a close eye on those individuals who are at a risk of progression.
Final question, Dr. Prashant. Is it time to reconsider getting one more booster shot? A lot of folks have not gone to third. It had stopped at 2. Is it time to reconsider it?
Absolutely, absolutely. I think those who have not taken the booster shot should take the booster shot. I think that is extremely important. I think so. Those who have not taken the booster shot should take it, because I think we have had the Omicron wave. A lot of individuals have infection-related immunity, and the booster shot would further augment that. Currently, the thought is that what we are seeing is a variant of the Omicron virus only. So a lot of us would have immunity from that, but the booster shot we know is augmenting the immunity. So those who have not taken the booster shot should consider and take the booster shot.
Those who've taken 3, just because the new wave is about to start, don't take the 4th one also, right?
So at the moment, there is no recommendation on the 4th one right now. So there's no recommendation on the 4th shot at the moment.
Okay. Dr. Prashant, appreciate your time. Such an honor and pleasure to have you on the show.
Thank you very much, Nikunj. Thank you.
Mask up, guys. Mask up. Delhi numbers are not looking all that encouraging. It's good to have, like they always say, precaution is better than care. It's important. All right. The Prime Minister, in a surprise visit, did visit the new Parliament and the new Parliament building, where he inspected various works. He was accompanied by Lok Sabha Speaker, Mr. Om Birla. Remember, this is not the first time when the Prime Minister has gone on a surprise check to review the construction of the Parliament complex. The new Parliament complex, what we understand, the next session hopefully will happen in the new Parliament. So it's all set and go, and India is going to get a new Parliament.
Okay. In the meantime, let's get back to markets and let's talk stocks once again. Star Health, they had their analyst day, and Harsh is here with the key takeaways. It seems that the new expense of management guidelines will put other standalone health insurance companies under pressure. Harsh, why is that?
Well, yes, absolutely. It helps, larger players like Star Health stand out. Also, removal of commission limits, Star Health clarified, will intensify competition, of course, because it allows larger commission payouts from these insurance companies. But what it also does is that Star Health believes that already commission payouts are quite high at 23 to 25%. So a large part of this has already been managed and it's already been factored into cost. What they also expect to see is they expect to see a 2 to 3% increase in their ROEs once Ind AS is implemented. And they also believe that the new commission guidelines will open up many new distribution avenues, like in the case of public sector banks. So, in terms of the larger picture, they intend to increase their share in banca from the current 5% in 9-month FY23 to 10%. So, that's one big positive. The other positive is, as I did mention, the ROEs are expected to go up by 2 to 3% as Ind AS kicks in. And they also, try to calm nerves with regard to life insurers being allowed to sell indemnity products, and they believe that that will not hamper growth prospects for Star Health. They continue to maintain around a 20% growth going forward with regard to premiums, and they expect the combined ratio to continue to be in that band of 93 to 95%. So largely on the positive side, Star Health management talking about some of the key pieces that are moving in the insurance puzzle at the moment.
Well, they are confident of maintaining a 20% premium growth, but what Harsh was referring to, Harsh essentially was referring to the fact that the new norms where the commission structures are going to be much more flexible, and how that in a sense could give a push at the distributor level to the entire non-life insurance piece. Aarti Industries will be in focus today on back of the analyst meet. Sharad is here with some of the key takeaways.
Well, yes, Aarti Industries, if you see in the last trading session, the stock went up more than 4%. They have actually snapped out almost 7 days of losing streak. And the important thing is they had an important management meet coming in, and the management did stress upon the macro concerns coming in the FY23. But they said there are some green shoots happening and for expected to progressively improve in FY24 when it comes to the macro demands. And because of that, the order size and the impact of the customer confidence, that will also increase. Apart from that, of course, two reasons are there where the EBITDA is expected to grow between 20 to 25% on a CAGR basis over the coming years, and those reasons are the ramp up of capacities and also the operational leverages which are kicking in. Apart from that, unabated capex momentum is actually making the company future ready, and a strong bullish commentary is coming from the management over there. Apart from that, they are also actually address the concern, especially of actually possibility of doling out ESOPs to actually retain talent, and that's the first actually we are hearing from a chemical company, at least on the attrition part, and that makes this analyst meet very interesting. Apart from that, also the company is exploring opportunities in flow batteries, and of course the chemistry is related to carbon neutrality as well as the long-term contract. So kind of a bullish commentary coming from this management meet, and we could have already seen that in last trading session as well.
Sandeep Savarwal joins us. Let's take a conversation forward. Sandeep, good morning. Thank you for joining us. Sandeep, I was looking at the global setup. March was all about this bank, that bank. Luckily, that entire fiasco in global financial banks is behind us. Feb was all about Adani. Jan was all about budget. What do you think April will be all about?
I think if you are a bear, then you need to find new reasons why market should fall. So if you are a bull, then you hope that none of these things come up again. I think we need to look through all of these things and see how the overall setup is. I believe pessimism globally around equities is still very high. Cash positions of investors globally are near panic high level when markets reach panic level. So people are so scared of investing in equities. And Indian markets have underperformed extraordinarily. If you see, most markets are now up 10 to 15% for this year, except US Dow, but Nasdaq is still up. And we are not doing well because of the reasons you said. So I think the first Adani related issues were internal. Bank related issues were external, while Indian banks had no impact, but those markets have recovered. In fact, in European markets yesterday again reached some near all-time highs, some near 52-week highs, and we are still down. So it defies logic, sort of. And I think it's an opportunity for investors to buy. I wouldn't be too bearish from there.
So would you play for a big, sizable, durable, tactical rally or a bounce, let's say for next 2-3 months?
Yeah, I think not only tactical, I think strategically also emerging markets positioning is such that I believe emerging market both in terms of valuations as well as positioning. But I think we could, and if the dollar stays weak, we could see a more durable rally also going forward.
Let's look at individual themes then, Sandeep. Will it be a large cap bounce? Will it be a small cap bounce according to you?
I think it will be across the board. Many small mid caps have got beaten down significantly. Large caps have also got beaten down, and many of them also present opportunity. Especially, I think the large banks, they haven't been beaten down so much. Like they are done 10-15% from the top. Some of them, some just 5-7%. But the fact of the matter is that Indian banks today are one of the safest in the world. We don't have those any of the issues which many of the global banks are facing. And the Indian banks have corrected along with the global financial correction. So I believe that's a good space to be in. Capital goods continues to do well. That's a good space to be in. Defense-related stocks, again, new order flows are happening. So I think that's a theme where investors should have some exposure. So I think a lot of things are working in India.
Sandeep, stay with us. Lots more to chat about, and in specific, of course, banks and cap good stocks that you're betting on right now. But here's Sanjeev Bhasin as well telling us what are some of his top fundamental ideas.
Everyone was chasing State Bank at 600. At 510, I think this is a steal. Same is the case with another PSU bank like PNB or Can Bank. All will report record profits. Yield softening is a plus for them. And plus, look at the macro environment. They are all saying, if I could hear Mr. Dinesh Kare, he said no impact of growth. In fact, the rural markets have started to see very, very strong growth. And I think banks are a proxy to that. Look at a stock like LTIM, the Mindtree L&T investment. I think their guidance is extremely positive. So, and if IT is going to play a catch-up, then LTIM or an HCL Tech can be outperformers. Look at stocks like JSW Steel, which I think can be a very, very big outperformer given that coke prices have softened and a weak dollar means China demand will give them a real impetus. Look at stocks like Escorts, where again Kubota is now signaling that they are going to get more market share from Mahindra. And I think that this whole dialogue on drought and all is overdone. I think Escorts will rule the roost. If you are a long-term investor at 13 times, you're getting an MNC. And last but not least, Godrej Consumer Product. I think that is shining its way through the glory. So these 5-7 stocks are looking outperformers.
Stocks that you need to keep on your radar this Friday. A couple of upgrades as well coming in, like our research team highlighted. But Reliance Industries as well, creditors and shareholders are going to be meeting on May 2nd to approve the financial services demerger. Sandeep, Reliance has been a stark underperformer. At 22.30 thereabouts, you think this could act as a trigger?
I don't see, for a non-existent, virtually non-existent company, I don't give value to that. I think that's the job of analysts to start ascribing value to any new business that is started without even knowing where it's going. So I think this is, it will excite a few analysts, etc. But I think as far as we have to evaluate the company on core businesses. Now, on core businesses, there have been issues in the past related to all the businesses like stagnating profits on telecom, retail profitability stalling, and petrochem refining margin, etc. But I think all of that has stabilized now. The stocks also corrected nearly 20% from the top. So I would think that at these levels, the stock is decently placed and holds the potential to give 10-15% returns.
Right. Kunal, do you also think that perhaps Reliance is poised for a bit of a uptick?
Well, yeah, it looks like. I think last couple of weeks back, there was a very strong uptick for Reliance Industries from 2200 as a base to 2270, 2280 levels. Then the stock consolidated at this 2200, 2280 mark for the last 1 or 2 weeks post that breakout. So it's neither shown any kind of a major downtick post that retest of the 2,200 mark. Neither on the upside it's managed to break past about the 2,300 levels. But the only change which has happened is that Reliance has started to act as more of a important stock in terms of the market performance, because we've seen over the last 4 or 5 days that whenever Reliance tends to outperform or show signs of strength, the markets or the indices as well shows a lot of resilience as well as a lot of strength. So that like-to-like correlation is coming back again, which was actually not the case for the index versus Reliance Industries as a highly correlation. So I think that coming back is a very strong indication that possibly the markets would now look up to the stock price performance over the near term. The levels which I think from a near-term trader which one should be watching out for is a breakout about the 2280, 2300 mark. So I think post that breakout, if it happens today on the back of news flow and assuming the stock sustains about those levels, that could be called as a classical turnaround as well as a start of a rally pick for Reliance Industries. So we'll wait out for that point where stock breaks past about the 2280, 2300 levels.
Pharma is going to be another pocket which is going to be in focus, and quite a bit of news flow actually. Of course, there's Aurobindo Pharma as well as Cipla, wherein the agreement with UN's MPP for one of their drugs and long-acting injectable has come in. Then, of course, there's Piramal Pharma as well, which has really gone one way, and that's southwards after its earnings last quarter. They've completed the development as well as the manufacturing of a drug substance and drug product for Brenzavvy. So that's going to be another stock which is going to be in focus. And then there's Lupin, which yesterday US FDA has issued a Form 483 with 10 observations for their Pitampur Unit 2 manufacturing plant. So that's another stock which is going to be in focus. Sandeep, sporadically, some renewed interest coming back into pharma, but would you advise buying?
So I think the view remains the same, Aisha, that stick to some of the large caps if you have to. So I think among the pharma companies, we only own Sun Pharma. I think mid-cap pharma companies have a lot of issues going for them, and that's also reflected in the stock prices. Some could be coming into value zone, but I would still like to wait it out, given that many of them have done too much capex and profitability is under pressure. So what that does to their balance sheets is something we need to see. The other stock people could potentially look at is Dr. Reddy's, which has been doing well, reasonably well. So I think if at all pharma stocks have to be looked at, I would stick to these two at this stage.
Naresh, do you also see value in both Sun Pharma as well as DRL, and do you think even at the current levels they can be bought?
So the problem is, if you look at Sun Pharma, it's done relatively better, but the price action has not been great. It's not done a large move as such, although I was expecting a much sharper move after that breakout about 950. When the went to 1050, we came back to 950. So overall, it's a place to hide, but not a place to ride in a big way. Same as the case with Dr. Reddy's. If you look at a little longer term chart, the stock every time it has come to 4600 over the last 1 year, it has become a problem zone. So the stock has again come back to 4600 yesterday. It could be a short term breakout. The only problem is the rest of the pharma sector stocks are not doing well. So out here, if you want to have a pharma allocation, these are the only two names which actually pop up on a technical basis, as well as I think Sandeep and others like.
Okay, PNGRB, they've amended their regulations to allow unified tariff for natural gas pipelines. In fact, the regulator has notified levelized unified tariff and has created 3 different zones. Let's take it across to Soumit and try and understand what exactly has happened and how it's bound to impact the gas sector. Soumit?
Well, PNGRB has notified the unified tariffs which will be implemented from 1st of April, that is tomorrow, and the tariff rate decided is at around 73.93. This rate is lower than what was the recommended rate, but this is the first time that the regulator has come out with such kind of tariff. Now, they have also given zonal bifurcation tariffs. For Zone 1, the tariff is decided at 39.45. For Zone 2, it stands at 74.97, and for Zone 3, it stands at 99.9 per MMBTU. Now, along with this, if you see what will be the impact of this? Now for transmission companies like GAIL and GSPL, they are the pipe owners, but the impact on them is neutral. This unified tariffs will have an impact on the end users like city gas distribution companies, fertilizer companies, petrochemical users, because they are the end users of this gas, and this impact of the same will depend on the existing tariffs versus the new tariffs that will be depending on the unified tariffs suggested by the PNGRB. Now for Mahanagar gas, if you see, it falls into zone 1, so the tariff rate would increase to around 39.5 rupees from an earlier tariff of 34.7. For IGL, which comes into zone 2, the tariff will increase to 74.97 from the earlier rate of 59 rupees. Now for GAIL, if you see, their units that is the LPG and the petrochemical unit, they are also end users of this gas, and for them the annual hit on EBITDA would be close to around 250 crore rupees as indicated by the company because of the higher unified tariffs. Now for Mahanagar Gas and IGL, if you see, the increase in cost would be around 1 to 1.5 rupees per kg, and this is in terms of the CNG pricing that we are seeing. So either the companies will have to hike the CNG prices or will have to take the impact on their books. Now for Gujarat Gas, the impact is still not certain because the company has an option to shift the gas source to Mundra, so we'll have to wait and watch how it impacts Gujarat Gas. Now what the options Mahanagar Gas and IGL have: firstly, they can completely pass on this increase in cost to consumers. Second is that they can adjust the impact against the lower gas prices as and when the Kirit Parikh committee report is accepted. So the next big thing to watch out for the city gas distribution companies is the acceptance of the Kirit Parikh committee recommendation, which will lead to lower gas prices for the city gas distribution companies.
Alright, dollar index is at 102, SGX is at 17,250, which means we could be in for a flat day of start. Sandeep, is it a time, is this a good time to, let's say, again have a very contra view on IT? Because Nasdaq is stable. Nothing else matters. Nasdaq is stable.
It's tough to say because when Nasdaq actually cracked a lot, Indian IT stocks were relatively stable. So does Nasdaq being stable actually indicate an uptick in outsourcing? So I think there's a lag. So my guess is that next 1 or 2 quarters will be quite tough for IT companies. Now, good news and good prices, all of us know, don't come together. So at some point of time within these quarters, we'll get into buy zone for IT companies. But I would still, at this point of time, I would still like to focus on domestic focused companies.
Okay, bunch of other stocks which are going to be in focus, and was just looking at the entire defense theme, and once again that comes back in focus considering BEL this time around has bagged a mammoth 8,000 crore rupee order from Indian Armed Forces. Sandeep, the news flow continues to be extremely strong, right, when it comes to defense orders. But is that kind of aggressive order pipeline already priced into the stock prices is the question.
For some, it will be. For others, it will not be. And in many of these cases, like the signings yesterday, these orders were already announced earlier. And it's just that first an order is announced and then it's actually signed and it then gets implemented. So I think, so we shouldn't be doing double counting in some of these orders. But that said, overall, it's a low volatility sort of sector in terms of performance. But these are long gestation projects for many. So, for example, many of the ship orders or frigate missile launcher orders which were announced yesterday, the delivery starts in 2026, 27, etc., and then goes on for a few years. So it's not that everything is going to come now. These are very long gestation projects, and as such, the revenue is spread out.
Naresh, Adani Group of stocks on Wednesday made a comeback after Adani came up with clarification on Tuesday that look, we've got there is no issue with the pledge shares. Technically, how are they looking? Adani Enterprises, Adani Ports, Naresh.
So if you look at Adani Enterprises, this is what comes out in terms of price action post that whole debacle. It made a bottom around 1100, 1200. The initial bounce back in February was closer to 2200. The bounce back in March was also closer to 2100 odd levels. So technically we are set up in this range of 2100, 2200 on the upside and 1100 on the downside. Very clearly it got tested a couple of times. So hopefully the bottom is done in the near term. But a fresh trend for the stock starts only about 2100, 2200. Now that's quite a say a level which is still 20-30% away from the current prices. So technically one would have to trade it in a very strict stop loss level, which is yesterday's low, which is 1600 becomes a stop loss if one wants to get into it, and ride for a move towards 2100. Adani Ports, on the other hand, saw decent correction from that 730 mark. There also, I think the base is made at 570 to 580. But again, it should have a lot of problem at 730, 750. So out here, one has to be careful, look at it as a risk reward trade and size accordingly. But Adani Enterprises could be the one where you can trade now.
Sandeep, we've not discussed Adani group of stocks in a while. Has the storm come and gone for them? Enough and more has come out in terms of disclosure, growth plans. Debt markets also are no longer that scared as what they were, let's say, in Feb and March.
Yeah, so the impact of Adani Group on the overall market, I think, should be limited, because the base case was always that they are unlikely to default, and if they are not unlikely to default, then for the rest of the market, the contagion should be limited. Now, how the overall Adani Group will perform is something we need to see, because stocks have fallen from the top, but they are still not cheap. So because they ran up, because the rise was so abnormal, that people think that because they are half the valuation, they are cheap. Most of them are still not cheap. So I think they will need to go through a long phase of consolidation.
That's Adani green for you, where it was versus where it is. It's quite amazing that how a few weeks can really change the sentiment for a stock. I mean, with Adani green and some of the Adani group of stocks went to P multiples of 100 plus, even 200 plus in some specific cases. They may be bouncing back from the recent low, but that's pretty much par for the course. We saw a good comeback in PSU banks on Wednesday afternoon. And let's look at some intraday graphs here. UCO Bank, Union Bank, Bank of India. Across the board, PSU banks on Wednesday, they made a comeback. That's Union Bank, UCO Bank for you. Union Bank, similar chart. Similar chart, I think, would be there for BOB, and a similar pattern was at play for Bank of India. These are big moves, Kunal.
Yeah, these are very big moves, Nikunj. And I think this, again, reinstates the fact that there is a wave of short covering. There is a wave of stocks which were actually beaten down after a stupendous rally in the second half of 2022, that these stocks are not down and out completely, and there is going to be a lot of more buying action whenever the markets get into any kind of a recovery phase. Now, the important bit which we keep tracking is that from a sector like PSU banking stocks, which are the leading stock performance, which is actually showing a lot of resilience as well as leading the charge for the entire sector. As of now, you still have Bank of Baroda, SBI, Canara Bank. These are the stocks which are actually not performing or breaking past about the previous swing highs. But you have the likes of, for example, Bank of India. I think Indian Bank is the other stock. I think these stocks have actually shown a lot of resilience as well as strength. So again, it's the mid caps or the tier 2 names which are actually doing better than the frontline large cap names from the PSU banking stocks. So we'll have to wait out for the pattern to be a bit more stable, because once the large cap name starts to participate and once we see a breakout into those large cap names, that's where a lot of credibility comes back into the move. So good buying zone for these PSU banking stocks. But again, whether it's a short-term rally or a near-term trend would probably depend on how the large cap stocks eventually participate.
Sandeep, where do you find comfort to add fresh positions to banks, considering traditionally you've liked SBI, ICICI Bank and Axis?
So I would think all of them are good to buy now. Risk reward is in favor. So I would say risk reward is that worst case another 10% downside and potential upside of 25% over the next 1 year or so. So I think risk reward is favorable. These banks are well placed. Their balance sheets are strong. Profit growth will be reasonable.
Right. Okay, those are a couple of stocks which are going to be in focus then this morning and that you can mark right now. Autos, they as well saw some of renewed vigor. So, besides the Adani names and what some of the banking and metal names did, and Eicher Hero MotoCorp as well held out. So did Tata Motors in trade on Wednesday, and as did M&M. It's back to, in fact, 1145 odd levels in trade. Sandeep, of course, tomorrow onwards, we'll have the auto sales data come in for March. Do you think any positive or negative surprises that we can expect?
That I can't predict because I don't know what numbers will come out. But I think many of the auto stocks got beaten down after the monsoon prediction that monsoons will be bad, summers will be very hot, and that might impact overall sentiment, rural income, inflation, dynamics, interest rates, etc. So I think that's where the correction in many of these companies which are actually doing well started. Now, we haven't had a hot summer till now, and monsoons is still a question mark how that will be. So I think those externalities difficult to predict. But valuation wise, I think these companies have become more reasonable now. And although consumer demand might be slow to recover, but I think it will eventually recover. And going into later part of this year, we should see stronger growth. So four-wheelers, autos, I would still like. Two-wheelers, I would still like to avoid.
Okay, Srishti though has an exact handle on what we can expect from the monthly auto sales numbers for the month of March. So let me take it across to her and find out what she's penciling in.
Well, if we talk about the March auto sales data, firstly, let's tell you what are the trends that we are picking up out of the four segments that are seen onto your screens. Firstly, if you will see, the commercial vehicle segment is going to be an outperformer this time around. There has been an underlying demand, but other than that, as we have been pointing out, that 1st of April will be the when you will see the RDE norms kicking in, and because of that, the price hikes will be visible on the commercial vehicle segment specifically. That is going to see up to 5% of price hikes, and because of this effect, we have seen a lot of pre-buying happening in this particular segment, and we are expecting a double-digit growth on a YOY basis in this particular segment. Firstly, then let's talk about the passenger vehicle segment. Here we are expecting a bit of a moderation when it comes to the new inquiries, and this time there wasn't that much of a cheer. Festive cheer for the passenger vehicle as well as two-wheeler segment, but for the two-wheeler, a respite is that the urban demand is still holding steady right now. The unseasonal rainfall that we have seen in the month of March for the northern and the central part of India can impact some of the tractor sales, but let's move forward and let's company specific. Let's have a look at what the expectation is from the passenger vehicle segment. Out of the three listed players, Maruti, M&M as well as Tata Motors, we are expecting that Tata Motors can show a growth of 5% for the automotive division on a month-on-month basis, but an outperformance can be seen by M&M that can show a growth of 10%. Coming to the commercial vehicle segment, we are expecting a double-digit growth on a month-on-month basis and even a growth on a YOY basis for all the listed players. And if we will see, Eicher Motors, Tata Motors and Ashok Leyland all expected to post a healthy set of numbers, but Eicher Motors VECV could take the lead out here in terms of the growth numbers. Coming to the two-wheeler segment, here the urban demand is still holding up, is still supportive, but the exports are not supportive for Bajaj Auto as well as TVS Motors. Then let's talk about the company-specific numbers. For Hero MotoCorp, we are expecting a growth of 17% sequentially with a number of 4.6 lakhs. For Bajaj Auto, this number is close to 2.8 lakhs of units. And for Eicher Motors, Royal Enfield, watch out for the number 73,000 above units is what we are expecting. And lastly, for the tractor sales, we are expecting a double-digit growth on a month-on-month basis, but unseasonal impact, like we highlighted, could have an impact on the numbers as well. So we will watch out for that data, but do look out for the commercial vehicle segment and especially the heavy commercial vehicle segment. Back to you.
Okay. Sandeep, PSU banks, excepting SBI, nothing, use the exit to get out. In fact, a lot of our viewers who are watching this, they may have bought PSU banks in November, December, January, considering that the trade would have extended itself beyond 2022, but that trade has reversed. Now you're getting a spike back. Time to clean up the house?
I think I don't buy many of these banks, but that doesn't mean that they can't rise up further. If the overall banking sector moves up, then they might also move up. But challenges are more on the operational side, because this year we would have seen the best of the reduced write-offs, increase in margins, etc. All of that will not flow through from next year onwards. So I think results and everything are not going to be as great as what people think it would be.
Why do you say that? Credit growth is still strong. Retail NPAs are under control.
Yeah, because of the fact that the credit the credit growth has been strong. It will moderate a bit, but I think on the deposit side, many of these PSU banks, the costing will go up substantially because they are losing market share in low cost deposits, and that's once the easy liquidity phase is got over, I think that will be the challenge. So I think the impact of that we'll need to see.
Bunch of other names which are going to be in focus. In cement, the industry feedback is suggesting that there is going to be an attempt of a price hike come next month. We did see on Wednesday as well, a couple of these cement names actually did make a move. India Cements held out by about 5.5%. There was Dalmia Bharat and the rest as well, which did see a bit of an uptake. Ultratech as well held out by 2.5%. So this is going to be another sector which is going to be in focus. And then, of course, Max Financial as well, wherein the promoter Max Ventures has sold about 30 lakh shares and Plutus Fund has bought about 20 lakh shares in this particular stock. So that's going to be another stock which is going to be in focus this morning as well. JSW Energy, they've completed the acquisition of the RE portfolio of Mitra Energy, so that's another stock which we are going to be keeping a close eye on. And then Tata Power as well, which is setting up a 4 gigawatt solar cell and modules manufacturing plant. That's the other stock in focus, currently holding up 1.6% as we speak right now. But Kunal, in terms of a trend, what's led us back to this 17,100 thereabouts, and what do you think sectorally or in terms of a bunch of stocks which would lead us higher from here, if that's to be the case?
So I think the only reason why the markets have actually fallen down, and it's not a sharp fall like what we've seen in I think in June, July 2022, where the Nifty had fallen very sharply towards that 15,200, 180 kind of a mark, or corrections prior to that, October 2021, etc. So in the last many attempts, the markets went to a very sharp correction, whether it's the initial sharp phase or the ending sharp phase for the markets. But this time, so imagine falling by 10%, it's taken almost 4 months for the markets, precisely from the 1st December highs for itself. So that tells you that it's been a very slow and a grinding correction, and that's because there's been weakness across the board for so many sectors. Now it actually started off with the so-called defensives, the pharmas and the FMCG stocks, which managed to go into a correction phase. In the last 1 month, the auto stocks, banking stocks, they have started, which were actually the most stronger names, they were the ones which started to get into a correction. So it's a mix of sectors which have actually underperformed. So it's very difficult to preempt which sectors would lead the rally first. We would need to see the signs that possibly the sell-off in the banking and the auto stocks that baits down significantly. And if you see the recovery there, then we can expect the markets to get into the same kind of a theme where you might see the financials or the high beta spaces which may actually outperform. So as of now, difficult to preempt which sectors would move up higher, but then the signs could probably indicate auto stocks and banking stocks, they could be the more stronger weighted names which could lead the recovery.
Okay, betting on banks as well as autos. Time to talk mid-caps as well. And Naresh, what are your mid-cap stock ideas?
So that would be a buy on Phenolics Industries. The stock saw a good volume bump up yesterday in the ending hours. The stock has made a base around 160, a trend line breakout of 174 yesterday. Expecting a move towards 200 in the short term. A stop loss to be kept at 164.
What's on your mid-cap radar?
So it's a mid-cap IT name, Cyient, which has actually done reasonably well. In fact, in the last week or so, the stock had a very strong candle volume breakout. From 940, the stock had risen up to 1009. In the last 2 or 3 days, post that breakout, the stock has corrected, come back towards the mean. So again, very good risk-reward buy for Cyient at current levels, targets of 1080, stop loss at 940.
The